is a sleeping giant, and I think the long-term investor is going to be very happy with Vici. And I think in the next 2 to 10 years, this company is going to grow massively in the stock market. Now, I have 4 reasons that I'm going to share with you why I think investors are kind of holding out, but also these 4 reasons are why I'm so bullish on it. And once they happen, this giant is going to wake up. So let's take a brief look at their stock charts. Now, their 1 year chart, you'll notice, is up 12%, which for this is year to date actually, but that's still not bad, right? The stock market grows at an average of 10% per year. So 12%, if you invested at the beginning of 2021, you're up 12%. And if you look down there, they do pay a healthy dividend of 5.21%, and they're at a market cap of 17.37 billion. But I also want to show you their 6 month chart because I think a lot of investors started investing in Vici about 6 months ago. And if you listen to Joseph Carlson, I think that's about when he started coming out with his videos for Vici and why he's investing, which got me to look at this company and start investing. But if you started investing 6 months ago, you're down 13%. So I think a lot of investors with this company that invested 6 months ago are, kind of probably debating, do I keep the stock or do I sell it? Well, I'm here to put my opinion forth on why I think it's probably great to keep this stock, especially long term. So let's dive into a few things before we get to the 4 reasons why I think this giant will wake up within the next 2 years. So, you know, there has been pent up demand for the experiential type, you know, uh, exhibits and vacations. So there's pent up experiential demand. Now, there could be demand for products like iPhone or toilet paper from Costco, but I think due to the pandemic, people want to get out and go have an experiential vacation. So Vegas, Disneyland, things like that. Now, Vici is a REIT that focuses on experiential properties. So they're very they own a lot of properties in Vegas. They own, mainly casinos. They also have properties that they own across the United States, from golf courses to other casinos. Now, casinos aren't just about gambling. They, put on shows. There's convention centers within them. There's clubs. There's buffets. There's a lot that goes on with casinos. And people pay high dollar for experiences. Think about it. When people go to, a spa, when they go to Disneyland, when they go to Vegas, money isn't, the focus like it would be going to a grocery store, right? Where you have a list and a budget. When you go to these places, you're willing to spend money. And that's why I love owning this REIT, because this is where people aren't so worried about how much they spend. And, interestingly, during this pandemic, a lot of REITs struggled, but Vici collected 100% of its rents on time. That's amazing, because you would have thought the opposite when it came to experiential properties, especially like the Vegas Strip. You thought they would have suffered so massively that they wouldn't be able to pay their rents, but they paid 100% of their rents on time. I think this shows how profitable they are and how people are just dying to get back out there. I've heard from many that Vegas is as busy as it ever has been. And so, I think this is because Vici has the best in class quality tenants, and that makes a difference. So these tenants are paying up 100% and in cash too. Vici also has leases with these tenants, and they have triple net leases. So what that means is these tenants are responsible for expenses on top of rent. So very smart on Vici's part. So the tenants pay taxes, insurance, maintenance. So a tenant has to fix, any issues with their building. Vici doesn't pay any of that. That's on the tenant. So I think that's very smart. Also, Vici usually signs long-term leases up to 40 years. So I like that because that means they're, locking in something for the long term. Now, people are going to say, well, are they able to keep up with inflation with long-term leases? Well, Vici is smart, and so they built in annual increases that protects Vici from inflation. And so that kind of, is great that we don't really have to worry about that, that they put that in their leases. Because inflation, as you know right now, is ridiculous. So because of their contracts, they're able to really increase those rents, especially when they're needed. So I just wanted to list a few things that I thought were very interesting to highlight. But now let's go into the four things. Now, these four things I think have caused in the last 6 months the stock to go down a little bit, but people have short-term thinking, and it's key to have long-term thinking when you're investing. You have to look into the future. And so these four things, once they occur, Vici is going to wake up, and I think we are going to wish we bought in at this time right now. So I am investing as much as I can into Vici responsibly, right? I don't want it to be a huge portion of my portfolio, but it is right now being one of the top stocks in my portfolio because I think long term I'll slow down that buying as the stock really starts to take off. But I'm getting in now where I feel is a great opportunity. So let's go into those four things that will wake the sleeping giant and bring a flood of investors into this stock. Number one is Vici needs to become and be considered investment grade. Right now, they are not investment grade. And, investment grade basically tells everybody that you made it to a certain grade, a credit rating by an agency that says they're at low risk for default on their loans. And Vici, if we look at this chart, they were rated by Moody's, Standards and Poor's, and Fitch. Now, Moody's, they have a Ba13 rating, and then the other two have a double B rating. Now, in order to be considered investment grade, you have to be a triple B negative, so a BBB negative, or with Moody's, you have to be a Baa3. So what you can see here is Vici is one step away from being considered investment grade. And what this is going to do is this is going to tell investors they have a low risk of default on their loans, and getting that title of investment grade is going to allow Vici to borrow more money at cheaper prices. So this is going to be great for Vici, and once investors see this, they are going to start buying Vici heavily. So number two is Vici is currently not on the S&P 500, even though they have a bigger market cap than REITs that are on the S&P 500. And so once they get included into the S&P 500, this is going to bring a lot more attention to them, and it's going to, have a lot more investors buy this stock and a lot more, brokers buy into the stock because now they're going to be included in a lot of ETFs. And so the CEO predicts that at the earliest, they should be considered by the end of 2022. So a year from now, maybe they'll be put on the S&P 500, but if not, I think it'll happen in 2023. And so this is another thing, by being included in the S&P 500 will really put the attention on them and investors will start buying. Number three is once they solidify that MGM growth properties deal, once that's solid, I think that's going to create another round of flood of investors to come in and invest. And again, this is a $17.2 billion acquisition. And this is going to also help with that investment grade rating. It'll help boost that up. And again, once people, I think they're just like, there's always worry that a deal might not go through. But, the CEO is very confident this will go through next year. And once that does, that's going to really put some fears aside for investors and they will buy in. So that's number three, is the MGM growth properties deal being solidified. Number four is they need to lower their debt. So let's look at this. Now, they are growing a lot. They've been acquiring a lot. So it makes sense why they have a lot of debt. So that's always one thing I look at, is usually debt is not a great thing unless that debt is being used to really prop its future for big growth. And that's what Vici is doing. And so if we look at their debt to assets, they're actually only at a 30.9%. But we need to dive more into this. So if we look at their assets, we will see that their cash, now, mind you, it's been growing quarter over quarter, so that's a great sign. But their cash is at $670 million. But if you look a little lower, most of their assets are held in non-current assets or other. And so this is why you have to look at the detail of companies' financials because it always tells the true story. So $670 million in cash, but if we look at the debt, the long-term debt in the most recent quarter, it's 4.9, almost $5 billion of long-term debt. So that's a lot more than that 670 million in cash. Now, they do have, again, a lot of deals that they're making, and they're having to pay a lot for these acquisitions, but they have a lot of assets as well. And so the CEO has mentioned that their dividend is extremely safe. And once these deals, especially with the MGM growth properties, get solidified, that income from those properties will start coming in, and they'll be lowering their debt significantly. Now, mind you, their debt over the last few quarters has reduced. It was around 7 billion, so now it's around 5. So I that just shows right there they're not, you know, they're not just letting it get out of hand. They are focusing heavily on reducing it. And so we can look at this and just be, I think, happy that the debt that they have is really propping them up for future growth. But investors, if they don't look at the details, they're just going to see a lot of debt and they're not going to invest. So once they lower their debt, this is going to really help them to bring in another round of flood of investors. And so those are the four things that will wake Vici up and really cause it, I think, to really rise in the stock market significantly. So that's becoming investment grade, being included in the S&P 500, solidifying the MGM growth properties deal, and continually lowering their debt to where, maybe their cash is more than their debt within the next couple of years. That would be awesome. And with Vici, I listened to an interview recently. The word global was put in there. So it looks like they want to expand globally eventually. There's another huge opportunity for Vici. And so, what I'm trying to get at here is Vici is being, kind of, you know, kept low right now in the stock market because investors are looking at these four things only in the current, view. But you look long term, all these things are going to create huge, uh, growth, and it's going to bring in a flood of investors, and those stock prices will rise, and you have a very healthy dividend. Now, REITs typically don't grow very quick. That's why they usually pay a higher dividend. So that way, between the dividend and the growth, maybe it gets to that 10% per year growth in that REIT stock. But Vici, I think, is in a very unique position that in about 2 years, we'll see, a higher than average REIT growth stock than other REITs. And I'm telling you, I just have a feeling, and it's my opinion, of course, do your own research, but I think now's the time to invest. Anything below $30, let's look at their stock price target. So their stock is right now hovering in the $27, $28 range, but it's got a low target of $32 within the next 12 months and a high of 39. So right there, that's already some decent growth, and that's just a year out, right? Like I said, I think in about 2 years is when it really will start taking off, especially when all these things hit and all four are checked off, like we done this stock will grow. So I wanted to share this with you guys, especially because I love this REIT. I think it's so different from any other REIT, and it's not really focused on right now, but I think in the future, a lot of analysts and investors, big money, will see this, start to understand it, and put their money into it as well. And so I think now's the time to get into it. I'm investing heavily, and I'm going to reveal my portfolio at the end of the year, so stay tuned. Please subscribe to my channel. It's free. It gives you another view, some more, opportunity for learning something from someone else. I provide as best I can the most quality content. I'm growing myself, so I appreciate it if you subscribe to my channel. And I hope you guys have a fantastic day. We'll see you next time on Mark's Finance and Fitness.